I'm Matt Bishar with NAREIT's REIT.com here in Phoenix, Arizona for REITWise 2015. Joining me today is Ron Bohlert, manager with the global listings of the New York Stock Exchange. Ron, thanks so much for joining us.
Thank you, Matt.
Now, the REIT IPO market seemed to pick up late in 2014, most notably with the Paramount IPO. What's changed in the market that drove that activity?
Well, overall, the IPO market in 2014 was incredibly successful for the New York Stock Exchange. Our market recorded 117 IPOs throughout the course of the year, raising $65 billion. Keep in mind, a chunk of that was the record-breaking Alibaba IPO from the fall, but still, nonetheless, in terms of number of deals and capital raised, very successful on all fronts. As far as the REIT space, though, if you look at the REIT index, throughout much of 2014, we were playing a little bit of catch-up from the relative underperformance in 2013. It took until September of last year to get back to the mid-2013 levels. However, after we reached that level in September, you might remember we saw a pretty steep downturn, lost over 90 points, 8.5% or so, as a result of interest rate concerns, a little bit of profit taking. But as far as an IPO window, it kind of closed up a little bit. It wasn't until November that we got the 90 points back, went a little bit higher, and then we had a window of a week where we saw 3 REIT IPOs happen within the same week. We had Store Capital, Monogram Residential, and then the record-breaking Paramount IPO that you were referring to, and they all took advantage of that nice upturn and that nice window that occurred.
Now, looking through 2015, what are you expecting in the way of REIT IPO activity?
I think 2015, first let's take a look back at 14, where we saw 11 new REITs come to market. And I think we're going to see some pretty similar trends that we saw then, but it wasn't traditional IPOs that we saw throughout 2014. For the most part, we saw listings coming about through spin transactions, carve-outs, non-traded REITs coming to the public market, conversions from existing companies. So they're all different types. And we also saw a very large diversity of sectors represented. We had a farmland REIT, we had residential, we had hotel. And I think looking forward into 2015, we're going to see a very similar trend. We've already had 5 new listings this year, one of which, Xenia Hotels, was representative of a spin from a non-traded. And the pipeline looking forward is pretty healthy into 2015. Provided the market cooperates, we could see some really good results again.
Great. And lastly, what are you seeing as some of the trends that are impacting the overall REIT market?
There are a few high-level catalysts that we've been seeing move in the market so far this year, and I think we'll see it throughout the rest of this year. Top of mind, interest rates. It's not a big secret here. They're going to be driving decisions until the Fed makes a decision on if and when they are going to move rates. Whether or not it's warranted in the REIT space, the moves that we see, it's still going to be happening from a trader's perspective without a doubt. The strong US dollar. That's something sort of a double-edged sword for the market. Not so much an impact for the REIT space, but exports are made a little more expensive, a little less desirable abroad. We're seeing some companies noting negative foreign exchange impacts to their earnings looking forward. So somewhat of a negative, not so much for the REIT space, but the market's going to feel that. On the positive side, though, the stronger dollar has some deflationary pressures in the US. That could cause the Fed to move forward, ratcheting up the interest rates, seen as a positive for the market. So you have both sides of it there. Oil costs. We've had a prolonged downturn, a lot of volatility lately in the prices up and down, and that's being felt across a myriad of sectors in the market. In that consumers have a little more discretionary income in their pocket from the depressed fuel costs, which is nice. But you have the oil-producing regions, which are starting to feel the pain of reduced workforces, lower revenues, and in some cases reduced real estate values also. And then lastly, something that it's nothing new to the market this year, something we're always going to be watching is the global political landscape. You have issues in the Middle East, in the Ukraine, in Europe, as well as the Asian markets that traders will continue to watch and look at for both investing and day-to-day trading decisions.
Great. Ron, thank you so much for joining us.
Thank you, Matt. It's a pleasure to be here.
For more on this and other REIT news and analysis, be sure to visit REIT.com.